All right, hello, everyone. Happy Monday. Happy February as well. Welcome to this weekly market check-in with myself, Greta Wander, host, and I'm joined by Derrick Oldensmith, the leader of the T3 Live's ProDesk virtual trading floor and also a registered professional trader with T3 Trading Group. It's a prop trader. As I mentioned that, let's go ahead and just take a quick look at Derrick's current positions. Here's what he's currently trading as of 12:30 p.m. Eastern time today. Again, he is a registered professional prop trader with T3 Trading Group. So Derrick, the topic today is tariffs and the market reaction to those tariffs. And then we'll also discuss, of course, some news coming up this week with earnings and all of that fun stuff. But it's Monday and it's the beginning of a new month. How's your day going so far?
My day's okay. I was up a lot this morning. I gave a lot of my open P&L back. So now I'm trading around flat on the day, which is how it happens sometimes. But you know, I'm happy with my positionings right now, especially given a lot of this uncertainty that we're dealing with the tariff situation. I feel like today, in some ways, is similar but different to last Monday when we spoke. When we spent the entire time talking about the uncertainty that came from the DeepSeek AI that sunk the market down. Now we're here to discuss uncertainty around the tariffs that caused the market to gap down pretty big this morning.
These tariffs have been a big question mark for how the market would respond leading up to when it actually happened. For so long, it's been, well, the tariffs aren't here yet, so the market doesn't care, and we're just trading off the news that is here. But now the tariffs are here. We're getting a little bit of relief, of course, after the Mexico tariffs were paused with the border deal, but still tariffs on Canada and China. China is, of course, being smaller. But now that the tariffs are actually here and it's not the what if for the market, I feel like every time, you know, we have a past to look back on with the market and Trump and tariffs. We obviously have his first administration. I feel like every time there was tariff news or trade news in the first administration, the first move was really volatile and extreme. The second time it was like, okay. The third time it's like, okay. Do you feel like the market will slowly just kind of have the same type of reaction to these types of moves this time around, or is it different?
Right. So first of all, we also just saw Trump about a half hour ago came out and said that he is considering hitting the EU
yes.
10% tariffs.
The EU.
So now we have that on the table as well. Him coming out and saying things, I mean, this is a little bit similar to the first time we had a Trump presidency. It just creates a lot of volatility in the market. I mean, Friday was a perfect example. Friday, we were having a really strong day. The market was up a lot. And then around 1:15, Trump came out and said, no, I'm going to be announcing the 25% tariffs on tomorrow, which was Saturday. And the market dropped the whole remaining of the afternoon trading session, and it ruined what looked like was going to be a very bullish day. Then we got the follow through to the downside on it. So I think it matters. Tariffs matter. The question is how serious these tariffs are or not. Is this something that he really wants to do, or is this something that he is just utilizing as a way to bring these other countries to the negotiating table to get what he wants? And the market gap down this morning, depending on which index you're looking at, like 1.5% to 2.5%. I personally think that if the market truly believed that without a doubt we were going to be implementing 25% tariffs on Canada, Mexico, an additional 10% on China, 10% on the EU, if that was going to be happening with certainty and that was going to stay that way for the next 4 years, we would be down a lot more than 2%. I think that is a recipe to potentially create a global recession and potentially create a bear market here in the United States. But that's not what the market thinks. The market thinks that this is just positioning. Now, the degree of the down move that we're having, I think, comes from the additional uncertainty more than anything. And this is what you and I were just discussing last week when it came to DeepSeek, when I said, I don't know how truthful the DeepSeek news is that's coming out, but I can tell you at a minimum, it adds an additional layer of uncertainty to the market, and therefore stocks like NVIDIA are going to be trading down. And that is exactly what happened. So we're already seeing, it hasn't even been a full day yet, where Mexico, I guess, came to the negotiating table. They're going to send some troops to the border. And then now all of a sudden we are pausing the tariffs with Mexico for at least 1 month. So the market seems to believe that this is positioning more than reality. We will see how it actually plays out. We will see what the market's true reaction to it is. But personally, I think it's a pretty dangerous game. Tariffs are a great way just to make everyone poorer on both sides of whatever border you're dealing with. So we'll see what happens.
When it comes to a more volatile market environment, prompted by news like this, as a trader, does that for you feel like an environment that will be ripe with more opportunity if there's more volatility happening?
Sure. So generally, I love volatility. Some of my strategies are built to make money off volatility. So I don't mind it. It can be a little bit tricky though, and I remember this happening a lot during the first administration, where it's like you put on a great looking technical trade, whatever your pattern is, it's working in your favor, things look great, and then all of a sudden, back at that time at least, Trump would tweet something and the market would just instantly move in the opposite way of those technicals and stop you out in both directions. Sometimes he would move the market to the downside. Sometimes he would move the market to the upside. But I sometimes am long. I sometimes am short. The flip side of that is he sometimes can come out with a random tweet or a random piece of news that moves the market in your favor. So it kind of makes all of that a little bit of a coin toss, and it probably evens out over time. I don't love the unpredictable nature of just seemingly a random news event could come out at any time that could move the market in one direction or the other. I mean, I guess that's always true that can happen, but it just seems like it happens a lot more when Donald Trump is the president.
Yeah, definitely. I think the market definitely pays a lot more attention to what he's doing and saying online and in the Oval Office. All right, so it is February 3rd, but it's the first trading day of February for the market. When you look back on your January felt like a very long month. A lot happened for the market in January. When you look back on January, how would you I haven't asked you a grade yourself question in a while. So how would you grade your trading in January and how it went?
I think that January was the most profitable month I've ever had in my career, January 2025. A lot of that came in the very beginning of the month with the quantum trades that I had put on, those big quantum shorts that I had on. They paid me just extremely, extremely well. I had a tremendous amount of conviction, a tremendous amount of size, and then got the news event with Jensen Huang that crushed those stocks, and it just turned into being like the most profitable 2 or 3 day period of my entire trading career, which therefore turned my month into like the most profitable month I've ever had. So overall, I would have to give myself a very, very high grade for how I traded in January. I did make a couple mistakes trading Apple at one point, so I can take a few points off from there. And Apple, I just over the weekend actually was doing a little bit of a review of my January trading, so it's all relatively fresh in my mind. Apple was my only real like loser on the month last month, and I just it had me. That stock had my number. I was long too early into the dip. Finally, when I got a bounce, it was more about playing defense and reducing my loss and actually making a gain on it. Then at a certain point, I flipped that thing short into the up move. I lost money on the short as well. I might have ended up actually kind of break even-ish on that short, but Apple really kind of just had my number. So I'll take a couple points off from how I traded Apple, but outside of Apple, I would give myself an A+, a 10 out of 10. It was some of the best I've ever traded and some of the most profitable I've ever been.
Great month for you. All right, so then coming off one of your best months ever, looking at February, what's your strategy, your expectations? You know, you have a great month of profits under your belt. You obviously don't want to get ahead of yourself and get cocky in the month of February. So what's your strategy for this month of trading?
My strategy this month is
focus.
Planning on skiing a lot of powder this month. It's okay. February out here in Idaho and Wyoming, so that's my main strategy. I'm an opportunistic trader. So one of the things that I do on a daily basis is I analyze the big picture of the indexes, the S&P, the NASDAQ, and the Russell. And I ask myself, where is my advantage? What are the technicals currently telling me? And especially with the gap down that we had this morning, the S&P is neutral, the NASDAQ is neutral, the Russell is neutral. I don't have a strong advantage in a neutral market. I have a stronger advantage in a trending market, a market that's showing me multiple time frame continuity of bullishness or multiple time frame continuity of bearishness. I know what my key levels are that I'm paying attention to that will tell me whether or not the market's becoming more bullish or more bearish. For the SPY, I need us above 600 to be bullish, below 580 to be bearish. We're trading at 596.50 right now. For the QQQ, I need us above 530 to be bullish. I need us below 510 to be bullish. We're trading at 517 right now. For the IWM, I need us above 226 to be bullish. I need us below 218 to be bearish. We're trading at 223.70 right now. So I just have a very neutral market. So from an index perspective, I don't have a strong advantage right now until I get more clarity. And for the most part, the way that I trade is through a top-down approach. I start with a big picture view of the indexes before I break it down into smaller time frames and before I break it down into the individual stocks that I'm planning on looking at, where and why. And if I'm looking at a market that's not giving me an advantage at the index level, that takes away the advantage for me for most stocks as well that are going to be correlated to those indexes. And that tells me that the best thing I can do is be patient right now until I get more clarity. I learned from traders that were more senior to me a long time ago in my career that most of the best traders that are out there tend to make most of their money in relatively short periods of time. They might make their entire year over the course of a 2 to 3 month period within that year, and the rest of it they're battling, they're treading water, they're making a little bit of a living for themselves and producing some cash flow. So the fact of the matter is, I made my year in January already, which is great, but there's a long year left. I need to play some defense and not get what we call profit drunk in a market that's a lot more neutral right now. And that's where we're at. So if I think that God's gift to trading because I had such a great January and I start over trading this market when the S&P and the NASDAQ is looking so neutral, it's a great way for me just to start bleeding out some profits. I don't have an interest in doing that. So I don't mind being patient and trading less and having a less is more approach until I get more clarity at the index level. And the good part about being a stock trader as opposed to being like a futures trader who only trades the indexes is that there will still be stocks in play that might have a lower correlation to the market. So for example, even though they're a little bit out of play right now, we just mentioned the quantum names. I'm not sure if it'll be the quantum names that go again, or if it'll be some other fad that hits the market that causes a group of stock to go up 500%. But I can tell you that the quantum stocks right now, and especially at the end of December and beginning of January, have a much lower correlation to how the market itself is trading, where I can look at a QUBT or an RGTI completely in a vacuum and not care as much. I'm going to say I still need to care, but not care as much about my conviction on the S&P and the NASDAQ, provided that the opportunity is there. But at this point, if you look at any of those stocks I just mentioned, they've been range bound and kind of going sideways for maybe 3 weeks or so. So I also don't have an advantage there. So right now, I am biding my time. I'm waiting for more clarity either at the index level, or I'm waiting for some individual stocks to come out that can give me an advantage. And then we are in earnings season still. So last week was probably the biggest, most important week. This week, we still have Amazon, we still have Google, we still have AMD, we still have some big companies that are going to report. And whenever a company reports earnings, it tends to trade at a lower correlation to the market as well. And those can be one-off day trading opportunities that maybe I have a look at on those individual days while I, again, wait for more clarity at the index level.
Mm-hmm. That was my, I was going to talk about earnings next, our big names of the week. I think it's Palantir's today, Google's tomorrow, AMD's tomorrow, Amazon on Thursday. So it's definitely a little more spread out this week than last week when we had like the bulk just Wednesday and Thursday, like all of those reports coming. And then we do have some other economic catalysts this week. We get the first jobs report of the Trump administration. I guess it's only like part of the month, but it is the first jobs report of the Trump administration and of 2025's January jobs report coming out on Friday. What's your focus for earnings this week? Is there any particular one of those names or a different name that you're, I know you don't take on trades really before earnings, but any reports that you're paying attention to in particular that you would like to maybe take a trade after?
Sure. So I don't really like take trades immediately in front of an earnings report because I have no idea what they're going to report. But if I have a trade that's currently ongoing and has been ongoing as a swing trade with a good game plan that I've been in for, maybe a couple weeks or whatever going into the report, I do tend to hold stock into that earnings report. So I'm still currently short Palantir. I'm probably going to keep some Palantir short into the report. I'm still long a small position in AMD. I'm probably going to keep that small position into its earnings report, and then we'll see how it plays out. The fact of the matter is that my positioning in those two charts is complete opposite to the technicals, which is usually not how you want to be going into an earnings report, especially if you were going to ask like a Sami Al-Busad about it. Palantir's chart on the daily looks extremely bullish overall, and it's been consolidating for 2 months. That consolidation might be setting this thing up to break out. AMD, on the other hand, has been downtrending. It looks terrible. It's basically sitting at lows into the report. So we'll see how it plays out. A lot of the times, these earnings reports will move in the direction of their technicals, which means that I'll lose money on my Palantir short and my AMD long, but not always. And my thought process specifically when it comes to Palantir is that the stock is just so incredibly expensive from a fundamental basis at this price level. I'm not sure because I think it's a bad company necessarily or anything like that. I just think it's extremely overvalued. I think we saw Jefferies come out last week and reiterate Palantir based on their fundamentals with a $28 price target. I don't agree with them that Palantir belongs at $28. That's a little ridiculous to me. But at the fact that this is like the most expensive software stock that's out there times 2 or 3 leads me to believe that this thing belongs, whatever that means, more in the $50 to $60 area than the $82.50 area where it's currently trading. With that said, though, it doesn't mean that Palantir has to go down. I just think that the risk on it is to the downside from a fundamental basis. But if they completely blow out the earnings report, don't be surprised if Palantir is up 15 to 20% tomorrow. I think that the measured move from the options market is implying like a 14 or 15% move on Palantir. But sometimes stocks even exceed their measured move. So if Palantir completely blows out the report, they might be up 15 to 20% tomorrow, and I'll be getting smoked on the short that I have on. But I tend to think that the risk is to the downside just from a valuation perspective, because it's going to take them probably a decade to grow into this valuation unless they pull a real rabbit out of their hat that I'm not aware of.
And the measured move is not always higher. It's not always higher.
Right. It could be 15% down too, which will be good for me. I did sell some puts today just to hedge myself a little bit on the report, where if it goes down, I'll lose the stock. But if it goes up, at least I'll keep some of the premium of the puts that I sold. So that's Palantir. AMD I'm very small in, and I'll probably keep it. My position sizing on it is, I would say, somewhat inconsequential. I've been in this thing for a while with a plan to give it down to $100, and it's been continuously downtrending. It's tried to break its downtrend on a couple different occasions, but keeps getting whacked by sell-side analysts, downgrades seemingly every time it attempts to break out. And then it got hurt further with the DeepSeek stuff that came out last week. Obviously, not as bad as NVIDIA did, but it got hurt as well. And then Amazon and Google, I don't have positions on, but I've been very bullish on both of those companies. I love the way this Google chart looks. I love how this thing looks above $200. I think that Google is probably the cheapest or best value of these Mag 7, Mag 8 stocks right now. So I like Google a lot. I think it's probably going to go up, but you never know what the report's going to look like. And same deal with Amazon. These two have been like my two favorite in the Mag 7 world for quite some time now. And both of their charts are looking great for the moment as they set up for their earnings report.
All right, let's think back to last Friday. You mentioned, Friday was setting up to be a really strong day, and then the tariff news came out and just obliterated the market and what the day looked like it was going to be. When on a day like that, think back to last Friday, how did you manage that complete 180 in the market? And I'm sure it went against some of the positions you had on, in preparation for the day, it was a very different day, and then that happened. How do you manage a day that flips you on your head like that?
Sure. So I, for a while now, haven't been in love with this market, and I've been having shorts on and longs on at the same time. So they're obviously in individual stocks and individual positions. So every once in a while, you get that very, very frustrating day where your shorts are going up and your longs are going down. As a matter of fact, I think I might have had one of those days last week, and I was annoyed by it. I was like, oh my God, what's going on? All my shorts are up and all my longs are down. But I just haven't been sold on this market because, like I said, these Qs especially have just been trading in this neutral range between 530 and 510 for the vast majority of the month of January. So I don't have good clarity there. So I've got shorts on, I've got longs on at the same time. The SPYs, had they closed at highs on Friday, would have confirmed full-on bullishness on this market. So I was actually just getting to the point on Friday where I was like, all right, if we close up here at highs, if we close up here at 610, I'm really going to have to start reducing the shorts that I have on because the market's telling me that idea was wrong. And I've had some concerns about concentration risk in this market that could lead to a bigger unwind, but you need a catalyst in order for that to happen. And the earnings reports that we've seen so far that have come from Meta, Microsoft, even though Microsoft was down, Apple, even though they ended up selling Apple, they haven't acted as a catalyst to lead to any sort of an unwinding of this Mag 8 concentration, at least not at this point. But yeah, the bottom line is that I've got shorts on and longs on at the same time. So on a day like Friday, when we were moving higher for the first half of the day and we're looking really bullish, I was actually getting heavier into my shorts and piecing into them further as we went up and reducing the sizing on my longs as we went up, booking profit on it. And then when the news hit and we rolled back down, I was just doing the exact opposite. I was booking profit in those shorts on the way down, and I was re-entering longs that I had sold at higher prices on the way down as well. So it's just kind of constant a flow of positioning based on what the market does. And that flow of my positioning enables me to create what I call cash flow from my trading. So a lot of what I do is I take bigger swing positions where I'll be in those swing positions for days, weeks, months at a time, but I very actively trade around that core swing position to the point where, like, I mean, this Palantir short that everyone has talked about that I've had on for a while, I couldn't have been more wrong on this. I mean, I started shorting Palantir at, like, I don't know, $56 or something like that back in November. I've been shorted ever since, but I've traded this thing well enough that even beginning to short it at $56 with all of the movement it gave me, all of the sizing up at the right times at highs, booking profit at the right times on the way down, I'm back to being a little bit out of the money overall on my Palantir short, but my price is like $79 on it where I'm break even. So if you consider that I started shorting this thing at 56, and at one point this morning it actually traded below 79, and I'm overall break even on a trade that's gone $23 against me over the course of a couple of months. I consider that to be really good trading. So that's a lot of what I'm doing, and I probably wouldn't be in Palantir at all anymore, but I've really enjoyed actually having that on as a hedge to all my longs. I tend to be an optimist. I tend to be long the market. So I'm in 24 positions as we're having this conversation right now. I would assume that, I don't know, 16 of them or 18 of them are longs, something like that. But having that Palantir short on for these few months has really actually benefited me in the periods of time in December and January where these market gave bigger pullbacks, just to act as kind of a stabilizing effect on my overall P&L. And I can just kind of work the cash flow on the longs and the short at the same time, where I potentially can make money on both sides, as long as I don't get a Palantir earnings report that brings this thing up 20% after hours.
All right. Derrick, when you're looking at the stock market today, Monday, looking ahead for the week, what are some of the top ideas you're focused on as a trader for the week? And if you want to share your screen and do some charts, you can.
Sure. So we just got a big movement here on the market. The headline is Trump to sign measure to create sovereign wealth fund.
All right.
So I'm actually on vacation for most of this week. also. So I've been actively trying to take a little bit of a less is more approach today, and really for this week. I don't want to. Sorry, I got more Trump headlines coming out right now. I don't want to put myself in a position where I feel like I can't enjoy my vacation because I need to be logging into my computer to manage new swings that I'm putting on. But honestly, the biggest piece of advice that I had from my traders in the morning meeting today, and I'll just reiterate that right now, it goes back to what we were talking about before, is that the market right now is not giving us clarity. Don't overtrade when you don't have clarity from the market. When you don't have a strong advantage, don't overtrade. It's a great way to waste money. So even if I wasn't going to be on vacation, I actually think it's great timing that I'm going on vacation for the week. My favorite trade idea for today would be to not trade. Sit on your hands until the advantage actually comes in. Preserve capital for when the stars really align and you can make a lot of money for yourself. Know your key technical levels in the S&P, the NASDAQ, and the Russell. Be prepared for them to eventually break in one direction or the other for one reason or the other, and then you can follow through with that. With all that said, my leaning is to the downside a little bit on this market, but that's more based on qualitative fundamentals and a thesis than it is based on these very neutral technicals that we're dealing with.
All right, good stuff. Everyone, I did not make Derrick work when he said he was on vacation. He didn't tell me he was on vacation this week.
My vacation starts in 1 hour, so we're
okay. It's a working morning and then going skiing. All right, so you enjoy your week of hitting some powder. You said you're getting a snowstorm, so I hope you have some good fresh snow for some good skiing. Everyone who's with us live, if you would like to get Derrick's free ebook about the benefits of prop trading, again, Derrick himself is a prop trader with T3 Trading Group, and if you work with T3 Trading Group, you work hand in hand with Derrick himself. You can go to t3live.com/do live. Again, it's t3live.com/do live. Derrick, have a great rest of your week. Have some great skiing and some good trading, because I know you'll probably be trading a bit. And I'll talk to you in a week.
You better believe it. All right. Thanks, Greta. Have a good one. Talk to you soon.
Bye.